Good morning, investors, and welcome to today's U.S. Market Daily Outlook. Today's session points to a bullish sentiment, driven by robust economic indicators and strong performance in key sectors, particularly technology and ad tech. The market continues to digest yesterday's impressive GDP and non-farm payrolls data, reinforcing a Goldilocks narrative of growth without immediate Federal Reserve tightening. Major indices are expected to extend their gains, with the S&P 500 eyeing its recent highs and the Nasdaq pushing forward on tech leadership. Key catalysts for today include the ongoing interpretation of economic data, the implications of stable interest rates, and specific company-level news like AppLovins analyst upgrades. For the broader market, watch for the S&P 500 to hold above its 50-day moving average as a key support, with resistance targeted at new all-time highs. Turning to today's economic landscape, the latest data presents a mixed yet overall strong picture. We saw a significant rebound in GDP growth rate QoQ final, jumping from negative 0.5% to a robust 3.3%, indicating a resilient economy. Non-farm payrolls also surged to 73,000 from 14,000, reflecting continued strength in the labor market, although the unemployment rate edged up slightly from 4.1% to 4.2%. On the inflation front, CPI rose from 322.56 to 323.05. PPI increased from 148.27 to 149.671, and the core PCE price index MOM saw a modest rise from 0.2% to 0.3%, suggesting persistent inflationary pressures. Meanwhile, ISM manufacturing PMI dipped from 49 to 48, remaining in contraction, while ISM services PMI slightly decreased from 50.8 to 50.1, but still indicates expansion. The Federal Reserve maintained its interest rate at 4.5%, signaling a wait-and-see approach. From the Fed's perspective, strong growth allows them flexibility, but rising inflation metrics will remain a key focus. For the market, robust growth and stable rates typically fuel risk appetite, positively impacting sectors like ad tech, which is beneficial for AppLovins. Our bias remains bullish, underpinned by the strong economic expansion, albeit with an eye on inflation. The S&P 500 continues its upward trajectory, demonstrating strong bullish momentum driven by the positive economic data released today, particularly the robust GDP growth and strong employment figures. The index appears to be testing a key resistance level, with increased buying interest suggesting a potential breakout. Volume has been supportive, indicating broad market participation and conviction among investors. The positive sentiment, reinforced by stable interest rates, points towards continued gains. The nearest support is likely around its 50-day moving average, while new all-time highs remain the primary resistance target. The S&P 500 reflects the overall health and optimistic outlook of the U.S. economy. The Dow Jones Industrial Average has shown a steady advance, reflecting the underlying strength in industrial and blue-chip sectors. This upward movement is well supported by today's positive economic news, especially the strong non-farm payrolls. The index key support levels have held firm, signaling investor confidence and a positive outlook for diversified sectors. There's a clear momentum build-up, driven by solid corporate fundamentals and improving economic conditions. Resistance levels for the Dow are currently being tested, and a sustained push could lead to further gains, reinforcing the bullish market sentiment across traditional industries. The Nasdaq Composite maintains its position as a market leader, fueled by strong performance in growth and technology stocks. Today's economic data, coupled with continued enthusiasm for innovation-driven companies, provides a tailwind for the index. We observe strong demand, indicating high investor confidence in the tech sector's future earnings potential. The Nasdaq exhibits clear breakout potential, with bullish technical indicators aligning with fundamental strength. Key support levels are likely to be found around its near-term moving averages, while resistance is eyed at its recent highs. This sectoral strength is a key driver of the broader market's bullish tone. The VIX, commonly known as the market's fear gauge, has remained in a low volatility regime, indicating a high degree of market complacency and robust risk appetite among investors. This stable environment is a direct reflection of today's strong economic data and the Fed's decision to hold interest rates steady. Typically, VIX readings below 15 suggest a risk-on sentiment, where investors are more willing to take on equity risk, perceiving fewer immediate threats. The current VIX levels, likely trending downwards or consolidating at low points, suggest that hedging demand is subdued, reinforcing the broader market's bullish conviction and economic optimism.
AppLovin, APP, currently trades at 483.51, slightly down today but within a clear upward channel established over the past month. The stock recently broke past a key resistance level, signaling strong buying pressure. Price action remains near the upper Bollinger Band, indicating significant recent momentum and a potential expansion of volatility. While the MACD shows a bullish crossover with positive histogram supporting the upward trend, both the RSI at 70.14 and stochastic indicators 94.99 and 93.30 are in the overbought territory. This suggests that while the fundamental outlook is strong, a short-term consolidation or minor pullback might occur. However, the overall volume profile has been robust during this uptrend, confirming conviction. A strong support level for APP can be identified around the middle Bollinger Band at 442.64. Given the analyst upgrades and strong Q2 earnings, our near-term bias for AppLovin remains bullish, but investors should watch for potential retracements. Invalidation of this bullish view would be a decisive break below the 442.64 support. In a significant development for AppLovin, several analysts have increased their forecasts and price targets following the company's strong Q2 earnings report. This event underscores the robust fundamental performance of AppLovin, particularly its strength in the ad tech sector, leading to an upward revision in growth outlooks and financial targets. The market reaction has been positive, contributing to AppLovin's recent price appreciation as investor confidence in the company's future earnings potential strengthens. Looking ahead, the next catalysts for AppLovin will likely include further developments in the ad tech market, strategic partnerships, and of course the Q3 earnings report. This strong fundamental tailwind supports a bullish near-term outlook for AppLovin despite some technical overbought signals, as the underlying business performance is clearly impressing the street. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.